Welcome to the Maine Education Association Benefits Trust recording about GASB 75 accounting for retiree medical benefits. A word about this recording. MEABT is making this recording available to help participating entities address their ongoing GASB 75 requirements. We provide background on retiree medical benefits and the requirements related to that. We also will show you how to download your report in the upcoming portal launched in August. Do know that your auditors will make final decisions about how to incorporate these actuarial valuations that MEABT is making available. We defer to each district's auditor on how to do that accounting on each district's books. So we hope you will find this helpful, and we thank you for your time. What we'll cover in this recording, we're going to start with the beginning of key GASB concepts. Definitions that you need to know, what an implicit subsidy is, and how it causes us to have a liability. We'll talk about some of the nuts and bolts of the valuation process, and then tell you how to get your reports and how to share them with your auditors. And finally, we'll provide a glimpse at some of the key report sections. Definitions. GASB 75 means Governmental Accounting Standards Board Statement number 75. And it addresses the OPEB, other post-employment benefits, regardless of the size of the entity and regardless of whether it's pooled. And OPEB, other post-employment benefits, refers to those retiree medical benefits. So what is our goals? We want to make sure that you have a smooth disbursement of all the results from the different participating entities of MEABT. Our goal is to provide a very detailed report so that the auditors have the information they need. The work plan for this year, a memo would be issued around the end of July. You should have that from the MEABT. You have this recorded discussion guide to use as a reference for you or your auditor. Has the instructions you need. And then finally, when you go to the portal, you'll get full detailed reports from that portal. Right now, the full valuation reports are being used for June 30th, 2023. And they refer to a look back process so that the June 30th, 2023 process actually applies with a 1-year look back to the June 30th, 2024 reporting. We also keep access for you and your auditors to your detailed census, but it will be from last year. And then you can use that auditor share feature. So those are our goals today. Let's talk about the benefits. If eligible, a retired teacher can choose from the same plans offered while teaching. We have 5 programs. The first are for non-Medicare eligible, and the last is a Medicare Advantage plan if you're Medicare eligible. In terms of when you can elect this coverage, it's based on age and service. So if you're under age 50, but you have 10 years of service, that can help you with retiree eligibility requirements. But if you're over age 50 and 5 years of service, then you could look into these programs if you were to retire. The retired teacher's medical plan has 3 parts. 60% of the blended premium is paid by the state of Maine. 40% of the blended premium is paid by the eligible retiree. And a third part, which generates our GASB 75 accounting provisions, is that there's extra value being offered that neither the state nor the retiree are paying, but it's the extra group value that is offered via the MEABT programs. Blended premiums are lower than the value of the coverage because by law, those rates need to be pooled with actives and retireds. And that results in a lower rate because actives who are younger generally have lower costs. Let's take this with an example. Let's say there's a retired teacher who's 62 and they have single coverage and they're in the PPO 200 plan. And let's say the blended premium is $900 a month. The state pays 60% of the 900 or 540 a month in this example, and the retiree would pay 40% or $360 a month. But the real value of the coverage for someone who's 62 isn't really 900, but in our example is 1200 because age 62 is greater than the average that's being pooled for the blended premiums. So the state subsidy is 60%. That's called an explicit subsidy under GASB, and the state addresses that in its GASB 75 results. Now, what the retiree pays, the 40%, it's a favorable group rates. That's the $360, and that doesn't generate any accounting implication. But the extra value of that blended coverage, in other words, that $300 extra value, that's called an implicit subsidy. It's a hidden subsidy, and it's the extra value because of this program. That's what we value here in these GASB 75 reports for MEABT. I promised to share with you some key accounting concepts, and what we do first is we start off looking at healthcare costs, projecting them over time. And we know that healthcare costs increase with age. And our goal is to define all those retiree promises for the future benefits and what they cost for the currently retired teachers, actively working, and future retirees. GASB 75 is interested in equity across generations of taxpayers and workers. And the way that's done, well, they accrue the value of that benefit over the working lifetime, not waiting to when you retire and on pay-as-you-go basis, but on an accrual basis. Here, how do we do this? Well, we project the cost of those retiree benefits. The persons who are retired, those who are near retirement, and those actively working. And we do all of the benefits. Then what we do is determine the actuarial liability and book it on the balance sheet. Goal? Well, we want to be transparent about the cost of these programs in retirement. And the way that's done in GASB 75 is that actuarial liability is recognized on the balance sheet. It's just not a footnote disclosure. It's an actual figure on the balance sheet. So these implicit subsidies, they recognize the fact that there's more value than the blended premiums because retirees get a very good value, a lower cost premium. And the GASB 75 quantifies that value in an effort to be transparent and identify all the retiree promises. GASB has two pieces. It recognizes the obligation, which is on the balance sheet, and that's recorded on each school district's books. Plus, it recognizes, number two, the ongoing expense that would be included in the school district's expenditures. So both these items are going to be recognized on the books. If it's material to the school district's financials, GASB 75 could be impactful on how a rating agency reviews the district's financial status. But just know there are many factors involved in evaluating a financial status of any entity, including a school district. GASB is just one factor. Do note that when we talk about expense and we talk about obligations, there are no funding requirements for OPEB, and that's different from pensions. So these are implicit liabilities, not explicit. And what we have here for you is dealing just with that component. By doing these implicit costs now, we are achieving the goal for GASB to quantify the extra value of the retiree program. So this year, what are we doing? Well, we're doing a roll forward valuation, and next year we do a full. Every other year we do a full valuation because it's required by GASB 75. So this year's a roll forward, next year's a full valuation. Well, what does that mean? Well, the roll forward We use the same census we used a year ago. We use the same claims and all the assumptions that go with projecting them a year ago. But we do update for something called the discount rate. That's what you use to take those projected payments, bring it back with the time value of money to a single value for the obligation. A full valuation goes through a full update and refresh on the person by person census, claims by age, and all the other assumptions, including the discount rate. So let's talk about that discount rate this year. GASB 75 gives us a definition. We take those projected costs, we discount them back to give it the present value. And GASB is very specific. You need to use a yield or an index rate for 20-year tax-exempt general obligation muni bonds, but high quality, AA or more. So how's that rate been happening recently? Well, before the pandemic, back in 2018, we were above 4%. Then the rate started to come down a bit before the pandemic. And then, well, my goodness, we kept a very low rate for during 2020 and 2021. But recently, as inflation has risen, we have seen these rates return to levels here, 3.54, 3.65. And what that means is that this valuation is using this discount rate of 3.65%. And that's just a little bit higher than what it was a year ago at 3.54%. The measurement date is June 30th, 2023, and that applies to our June 30th, 2024 results, called the one-year look back. We have to factor in any significant plan amendments and during the period of the valuation. And in fact, if there's amendments that occur after June 30th, 2024, they could be required to be valued and disclosed if they're material. So we checked that out, and we found out that effective July 1, 2024, there were some continued updates to the out-of-pocket maximums, co-insurance, co-pays. There was a new mandate related to infertility and other care, and there's some hearing aid provisions added via Anthem. However, when we reviewed these with our retirees, we did not find they were significant enough to require a footnote disclosure. And these changes in July 1, 2024, they'll be part of next year's valuation. So let's talk about how you can get access to your Webmaster GASB portal for 2024. First, you'll receive an email. It will come from webmaster@chiron.us. Here's an example of the email. It will give instructions with your email address and then how to set up your password. And of course, to call Jennifer Kent if you have questions. When you click on that link, it'll welcome you to the new portal. It'll tell your username and you set your password here and here. You need to set a new password with each year, even if you logged in earlier. Also, once that password is set, they'll ask you to do what's called a double authentication. You'll need to verify your email and you'll be asked to log in that second time. Once you have that all set up, go right back, use your username, your password, and you'll be logged in. Here's what the screen looks like. View the report in your browser. You can also download the report, and you could look at last year's census files. You can also share this page with your auditor. Here's how that looks. Share with the auditor. It can have an expiration date, and you hit share, and they receive access to this portal, and they can get the information they need to complete your records. Again, you'll get an email. Validate your email. Log into the portal with your new password that you set, and then call if you have any questions. It's that easy. I promised a glimpse at what the reports look like. This is table 1 in the report, and it shows you the most recent year results and then last year results. Here's that total OPEB liability. That net OPEB liability winds up after the deferred inflows and deferred outflows being on your statement of net position, your balance sheet. So this is important. And this also shows you right here the expense. That's that accrual amount that goes against expenditures. So table 1 has a lot of good information. Table 2 helps you go from last year's liabilities to this year's. Notice there are no assets, as we mentioned, these are not funded. And then you have the net liability. It walks through the accruals, interest, any assumption changes this year related to the discount rate change, expected payments, and the sum of all these changes results in the net changes of the obligation from one time to the next. We also show you the calculation of the OPEB expense. It's table 8 in the report. And we do the calculation 2 ways, but get the same answers. It certainly shows how these results are validated and carefully prepared for each year. We also include in the report tracking deferred inflows and outflows. Your auditors will need this. Sensitivity of what happens if the discount rate changes or the trends are different. A full detail of all the actuarial assumptions we've applied, the census summaries, and all the plan provisions. In summary, you will have a very complete and thorough report to enable your auditors to have everything they need to get to account for GASB 75 for the MEABT Retiree Medical Program. Thank you for your time.